Ministry's draft auction rules for coal block auctions puts the floor price at a seemingly reasonable rate. How will all of this work for the metal and the power sector? We've got an expert with us in studio, Santosh Kamath, Partner Infrastructure and Government Services at KPMG India. Santosh, what do you make of what you've seen? And this is a broad opening question so far in terms of the auction modalities that are out in the draft note, the highlights, the challenges that this might pose for companies?
Yeah, I think overall, first of all, I think it's overall a positive development.
Okay.
The auction is a very positive development. It will increase availability of coal in the country.
Yeah, all that, yeah.
True. Now, in terms of the challenges, what I see is that if the end-use plants which had the coal blocks, if they now lose those blocks, then what happens to the investments?
Lose the blocks as in if those blocks are not available for those particular end users, and therefore they have no opportunity to bid for those blocks in any fashion.
Yes.
Okay.
So then that's a matter of concern.
So that's happening already. I mean, I'm just giving you an illustration. It's happening with Mahan and Hindalco, isn't it?
Yeah, true. So as you said, they are getting classified under the power category.
Right.
Whereas earlier it was for the CPP or the metals category as well.
How cast in stone are these classifications? Can they be? Is there scope, or do you think that they can be reclassified, or is that a risk that bidders will not want to take?
No, at this point they are as they have been classified. Okay.
No, they will. This draft note, if this is the final modality, then it's cast in stone, Senthil. Because then you're bidding for that whether that block comes, whether it's available for you to bid at or not. Because if Mahan's been moved to the power, then only those companies which are power generators will be able to bid for Mahan. The others will be left out. So I don't think anybody will give up that. Mahan's also a great mine. So.
True, you're right. Yeah. And I think you're right. For in such instances, the end-use company may end up losing it.
Yeah.
So what I would say the safeguard should be that the government should allocate linkages on priority to those end-use plants which have already made the investments and have lost those blocks.
No, what do you mean by linkages on priority?
I mean the new linkages,
Okay.
They should, I mean, what we are saying.
But all these guys are going to rebid, right?
No, they're going to rebid. They are going to rebid.
So what linkages are you talking about?
No, true. So they should rebid and they should obviously try to get new blocks. Okay.
Yeah.
But the example that you gave, if something was reserved for a particular end-use sector, and now that classification has changed. Okay, and if later on some of these end-use plants are not able to win blocks, then in order to prevent those investments from getting stranded, the government should look at, allocating future linkages on a priority manner.
So just to stick with the Hindalco example as one illustration, if they don't get a block that's as good as Mahan to bid for, or they bid and they're unsuccessful, you're saying the government should figure out a plan B to keep the coal supplies to Hindalco smelters going.
Yeah, I would say so. I would say so. Yeah, not just Hindalco, but I'm saying all those cases.
Yeah, I'm using it as an illustration.
Yeah, sure.
Okay, yeah.
Sure.
Okay, so that's the one big challenge. What else do you pick up as the other challenges in these modalities? Yeah,
the other challenge I would say is, again, these are long-term coal supply, coal development contracts, coal development and production contracts. We should have enough safeguards to prevent these contracts from running into the same difficulties as some of the power PPAs and road contract concessions have got into, right? So there should be enough safety valves, to prevent these contracts from getting stranded.
What kind of safety valves?
See, I think for one, they should have a certain level of indexation of these contracts, to market variables. Okay, as far as the prices are concerned. Okay, number one. Number two, in the case of power, they've said about 20% can be sold in the merchant market. Okay, as far as power sector.
Have they said can be sold to the merchant market, or have they said that any excess supply has to be sold to Coal India? That's
no, excess supply beyond your use, your need, can be sold.
But
to
any
coal.
Power generated from this coal can be sold. Sorry.
Yeah, I got it. That in a way gives a bit of a safety valve, because if 20% of my capacity I can sell in the merchant market, then
at market prices.
At market prices, and that's a bit of a safety valve. On the other hand, if it's 100% tied up and my coal supply is also tied up and the prices are tied up, and tomorrow if there's a variation in the coal production costs, and let's remember that you don't have that much experience of coal mining in India, by the private sector.
This will only apply to power, right? Because in the case of other end use, like cement or metals, etc., you're free to sell at market prices. So you can actually factor in a change in coal access costs.
True,
right?
True. You're right.
So only power is the way you're saying there should
power
be.
Power is, yes, there should be enough.
Yeah, but for the others, it's a matter of making uncompetitiveness, or how?
Yes, for others, the other concern, for the others as well, the other concern, there should be enough safeguards to ensure that prices don't go too high.
Okay.
Because at the end of the day, these are core sectors of the economy, and these could have inflationary impacts. So that's the other...
okay. So when you said it's a good thing, just point out the positives. Why is this a good thing?
It's a good thing because it will improve availability of coal in the country, and if this is done in a time-bound manner, in a fast manner, it can substantially improve coal. Second, it brings in transparency, clearly. I mean, this whole process is a much more transparent process, which is a good thing. So these are the two positives, I would say.
The Supreme Court has laid a deadline, a time deadline. Now it looks like it's very unlikely that the coal ordinance bill will go through Parliament in this session, because tomorrow is the last day. So what are the options before the government to meet that deadline?
See, I think the process will continue, and I'm not a legal expert, but I think even if it doesn't go through the Parliament, I think the process the process will still continue.
So basically, I mean, what the process requires for the government to do, if it is not approved in the next sitting of Parliament after an ordinance has been passed, is to reissue the ordinance. This is exactly what the UPA government did with the SEBI Act, the SEBI Amendment Act, with the new SEBI Act, let me call it that way. I think we had 3 ordinances, because 3 times over Parliament sat, the bill never passed, and so therefore they had to reissue the same ordinance 3 times over till finally they were able to get the act through Parliament. So I think in this case, especially given the fact, I mean, nobody would even question the government doing this because there is a Supreme Court deadline to meet, right? So I mean, A, the government is within full rights to do so, and B, nobody will question it.
Yeah.
Unless that's, of course, if it doesn't pass tomorrow. Hopefully Parliament will have some more wisdom and let at least this business get done. So,
sure.
Yeah. What about the price? 150 per ton is the reserve price, floor price.
Yeah, 150 for the so-called unregulated sectors.
Okay.
That's the floor price. I see nothing wrong in that. I think
is that good? How does it compare with prices otherwise?
See, the coal prices today, I mean, the imported coal prices are 3,000 rupees plus, okay? But that's the total price, okay? This is just the reserve price. I think that's reasonable. I don't see any issue with that, with the 150 rupees. But it's 150 rupees or the intrinsic value which the government valuation would arrive at, okay? So they're going to have a valuation for each block, based on the current price of coal, and then, calculating the cash flow and the NPV of that.
Okay.
So it's either that or 150, whichever is higher. Okay. So we yet have to see the NPV calculation for the different blocks.
Okay, but so does this give you a sense of how costs will alter, if at all, for all those companies who are currently sourcing coal from these blocks, and let's assume that they're able to sort of, rebid and succeed in those bids, if not for the same block, similar blocks.
Okay.
Will costs change dramatically for them?
Yes, costs would change, because let's remember that this
besides
is
the penalty, I'm not even getting into the penalty that they're going to pay, right?
Yeah, not the penalty, but the costs would change because you are in a bidding environment, and obviously that's going to drive prices up.
No, so how much is my question?
See, how much is
based on the floor price, do you know how much?
No, not based on the floor price we cannot say, because the floor price itself is not very high. So 150 rupees itself is not a very high number.
Okay.
But it's a bidding which will determine the final price.
So do you have any sense from the companies that you talk to as to where these prices could go in that bidding process?
See, my assessment is all depends on demand and supply, okay? And my current reading is demand is fairly high, okay, compared to the supply, okay? So when people are going to bid, they are going to look at the next best alternative for them. Today, that's imported coal, okay, or that's e-auction coal, okay? So given that perspective, given that the demand is significantly higher than supply in the current reading, prices, in my view, would tend to go significantly higher than the floor price.
Okay. When you say significantly higher, by how much do you expect?
No, it's really difficult to quantify. It's really mine to mine, It's really mine to mine. And there are 101 blocks, out of which 65 are in the private sector, which will go under auctioning route. So it's really difficult to give a number there. But let's remember that companies are going to look at the next best alternative, and that is going to be the basis.
What are your clients telling you? I'm sure many of these companies that are involved or will be involved in the auctions are clients of yours. What are they telling you about how they're perceiving the feasibility of these auctions, whether this will be a big positive step forward, even if it comes at a slightly higher price or cost for companies, or are they still bogged down with the technicalities of the draft auction note?
See, I think on the one hand, it is a positive because it's going to improve supply. Okay, clearly, that's one. As far as the technical modalities are concerned, I think one of the concerns is about, how are they going to ensure prices are in check for the unregulated sectors, you know, and it doesn't go up too high.
Yeah, okay? Because there is, I think, a ceiling in the power. There is the anticipation of a ceiling in the power bids.
Yes, in the power, you're right, there's a ceiling, which is a Coal India notified price.
Right.
So that sort of takes care of the power sector a bit. But for the other sectors, you know, how are they going to ensure that the prices don't go too high? That's one. The second thing I would say is there's a lot of untied power capacity as well. So even within power, there's a lot of untied capacity. And right now, it's not clear, because what the current framework says is that, you know, only up to 20% can be untied of the power plant, you know, and 80% should have a long-term PPA, you know, related to the mine that you get.
Yeah.
But there is a large amount of power capacity which is not tied up and which will bid in these auctions.
So how they will get dealt with is your question?
How they will get dealt with is the concern, is one concern that we would have.
Okay. Anything else you want to point out, Santosh? You know, a couple of companies that we track in the markets closely in relation to these auctions, JSPL, CESA, Hindalco. Are you able to give us a sense of really which ones of these stand to benefit the most at this point in time, you know, based on the allocation of blocks, etc., from these auctions?
I think all of them stand a chance of, you know, winning their, you know, getting good blocks, and they should be gunning for it. I won't be able to make any specific comment on
how
any
will,
of these.
like, let's say, a company like Hindalco deal with the fact that Mahan is no longer available for it to even bid for, and so therefore, and its plant is designed based on the coal grade available in a mine like Mahan? Will that be a big setback, or, you know, are these things flexible?
I think the grade of coal, I don't think is that much of an issue,
the distance,
as much as the distance,
the linkage
and the location, because, you know, the Mahan was very close to their end-use plant. So that would be a matter of concern. But yes, I mean, they would have to look at alternatives. And what are the other blocks?
Is there any block that's as close, based on the mental map you may have of this?
I think just recently, last week, the government did put up a few additional blocks, you know, into the list, into the fray, But it's difficult to say. I mean, I haven't looked closely at the economics of these individual blocks. So specific to this particular thing, I wouldn't be able to comment. You know, I haven't done that analysis.
All right, we'll leave it there, Santosh. Thank you so much for joining us and throwing some light on how this process is going to evolve.